Welcome to NV Group's financial analysis of Daimler AG. In this presentation, you will be guided through the most important findings of the financial analysis, highlighting what you should be aware of as a potential future investor. First of all, we will tell you about Daimler and their main activities. We will also tell you about their strategy, their market share, and their current position on the global automotive market. This will be followed by an analysis of the financial results for the period of 2008 to 2014. The findings of this analysis will be compared to the financial situation of the competitors. The biggest competitors for Daimler are PSA Group, BMW and Volkswagen. The shares of Daimler will also be discussed, giving you a clear picture of how Daimler is doing on the international stock market. All this will be boiled down to whether or not you should invest in Daimler. So, are you ready? Then take a seat and enjoy the ride. The previous video shows that Daimler is a high-end premium manufacturer in the automotive industry with a very diverse product portfolio. Daimler is known for extraordinary performance and premium quality, striving to achieve the leading position in all their areas of businesses. They state their mission as follows.
We believe it is our mission and our duty to shape future mobility in a safe and sustainable manner with outstanding products and services and trend-setting technologies.
In order to achieve this ambitious mission, Daimler has defined 4 strategic areas which they will focus on in the coming years. These areas are known as the strategic pillars of growth. These are strengthening of the core business, growing in new markets, be leading in green technologies and safety, and shaping of new mobility services. Each of the 5 divisions of Daimler has their own strategies. However, Daimler has one overall growth strategy where they intend to launch more than 30 new car models between 2012 and 2020. Daimler is planning to invest approximately 11 billion euros in property, plant and equipment in 2015 and 2016, as well as more than 13 billion euros in research and development projects. This gives a clear indication of a company with a strong strategy of growth, aiming to expand their product portfolio and increase market shares. Speaking of market shares, the next short video will give you an overview of how big Daimler's market shares actually are. Daimler is very well positioned on the global automotive market and was ranked 12th in 2013. Since 2008, Daimler's market shares has increased for all divisions. Mercedes-Benz cars market share in 2014 are in Western Europe 5.5%, in North America 2.1%, and in China 1.5%. Daimler Trucks has a market share of 24.4% in Western Europe and 40.3% in North America. Now, let's look further into the financial situation of Daimler. After all, that's the engine that makes the wheels go round. The financial analysis consists of a short description of the annual results for the whole period, followed by profitability, activity, liquidity, capital gearing, and investor ratio analysis. In order to see how Daimler handled the financial crisis, the financial analysis will cover the period of 2008 to 2014. When looking at Daimler's profitability ratios, the company shows positive tendencies after the economic crisis with overall growth. The graph shows the return on capital employed ratio, which shows how well the company uses the capital. A high ratio equals a more efficient use of capital. The return on capital employed is on a decent and stable level from 2010 and forward. Daimler has a high ratio when comparing to the competitors. This graph shows the return on equity ratios. This is favorable for Daimler, being above the industry average. In 2014, Daimler ended up with the best ratio of all. The operating profit margin ratio shows the relationship between earnings before tax and sales revenue. The operating profit margin for Daimler is after 2009 above 7%. One of Daimler's objectives is to achieve an average ratio of 9% for the whole group. They managed this in 2013, but in 2014 it decreased just below the goal of the 9%. And now for the activity ratios. This graph shows sales revenue to capital employed ratio, which measures the company's capability to create revenue by using its assets. It measures revenue generated for each euro of capital invested in the company. Daimler is good at creating revenue by its capital invested. They are, however, close to having a ratio below 1, which is not acceptable compared to the average of the competitors. This is something Daimler could seek to improve by decreasing financing liabilities like their high debt obligations. This graph shows the inventory turnover period, which indicates the average number of days that the inventories remain in the business before they are used for production. The inventory turnover period for Daimler is unsatisfying, having the highest number of days throughout the whole period, which they should seek to improve. Overall, Daimler is not very good at adjusting and using its assets in relation to the activity level compared to the competitors. Now, let's look at the liquidity ratios. Overall, Daimler is very well positioned concerning liquidity when comparing to its competitors. The working capital ratio shows that the competitors struggle, while Daimler has enough short-term assets to cover its short-term debts. The asset test ratio shows if the company has enough short-term assets to cover its current liabilities without selling inventories. The ratio should be at a level between 100% and 125%. The graph shows that Daimler doesn't have enough short-term assets to cover its current liabilities without selling inventories, but they are more able to than competitors, leaving them in a good position. The gearing in the industry is relatively high, with an average of approximately 60% for all the companies. The risk associated with the high gearing is not to be considered imminent for investors though, because this seems to be a general trend for the automotive industry. And now, let's look at the investors' ratios. Daimler has more than 1 billion shares circulating. The share market price has increased with a price per share of 26 euros in 2008 to a price of 69 euros in 2014. The dividend paid has likewise increased with a dividend per share of 60 cents in 2008 to a dividend of 2 euros and 45 cents in 2014. That's a remarkable development in only 7 years. Overall, the shares in the competitive companies Volkswagen and BMW seem more valuable than the shares in Daimler. Daimler shares are, however, still not a bad investment and still earn the shareholders some profit. The financial analysis has so far proven to be rather positive. The cash flow analysis shows another side to this story though. Daimler continues to invest, making them obtain more and more debt. This development makes Daimler a bit more sensitive and could mean that the company will not be able to pursue their growth strategies. The large investments and increased debt is, however, not necessarily a bad thing, assuming that the large investments will generate a positive return in the long run and prepare them for an increasing demand for vehicles. It is clear that Daimler has very high ambitions with their growth strategy. They are making large investments for the future to come, but also has high debt obligations. The share market price has only increased in the last 6 years, with increasing dividend being paid. This development could indicate a positive future for Daimler and might make it more interesting for you to invest in the company. You will be paid dividend every year and the share value will increase if the previous development continues into the future, making it a profitable investment. For further information about Daimler and more details about the financial analysis, please visit the NV Group's website at www.nvgroup.com.